Hello and welcome to another edition of Client for Life. Well, you might notice the video is a little bit different today. I'm actually recording from my home. I'd like to wish Will, our photographer, video specialist, a speedy recovery. Will had rather nasty accident hand gliding and is currently in Royal Melbourne Hospital having surgery on a very shattered and broken leg, so good luck and speedy recovery, Will. Well, the market's about to open. Next Saturday will be the first really big weekend for the housing market, the residential market, and I guess everybody's holding their breath to see what the results will be like because as you know, last year we came out of the box pretty strong off the back of a closing quarter in 2014. So 2015 Q1 and 2 just continued to build. Q3 was probably one of our strongest peaks that we've seen in the market in quite some time, and as you all know, we had a cooling off in the fourth quarter. So that actually saw our real estate figures. We peaked at 13.2% last year around August, September, and we closed the market at 11.7%. Interestingly enough, for those of you who watched my summary of last year, we actually closed higher than the Sydney market by 0.02%, which I think speaks volumes for Melbourne. It speaks volumes for the donut, because if you actually look at what's happened, Sydney's had one of the highest peaked results in years, certainly pre-GFC. I'd say we'd go back to about a 2008 correlated market, which is 8 years ago now. So if you actually look at what happened in Sydney, the peak cooled off with Melbourne actually closing higher. And one of the things I say to all my investors, one of the reasons that we promote Melbourne, not only because I live here, and that's where Solid is based, but if you actually look at the data going right across Australia, Melbourne is the most consistent market. Even in the global financial crisis, when London hit -11, it went below -11 for the results, Melbourne still maintained 2.2% positive growth, and that was in one of the worst markets we've seen. So the results were great. Everyone's waiting with bated breath to see how the first couple of auctions will go this year. So now on to this time of year. We all know that the credit card statements we get at the end of January and February can be some of the toughest credit card statements we'll get. Christmas spending, holidays, this is the blowout time. And all I can say to all my investors who are managing their budget, just get on top of those credit cards as soon as possible. If you're a little bit stuck or if it's a bit of a shock, give me a call. I'm always around to help, as you well know. So key thing is to get on top of credit. Talking about credit, Simon Birch wrote a fabulous article in last week's newsletter. I may even put a link to it in this blast now, that we all know last March the government came out wanting to really tighten on investor spending in terms of apartments and property across the board. And one of the ways that the RBA wanted to slow the market was obviously to increase the interest rates. But what we're actually finding now, and I did predict this back in March, April, if you were watching my videos, I predicted a levelling out, a softening of that mandate, and we're now seeing it come through. So if your investor interest rates are over 5%, definitely give us a call, particularly if you're around 5.5, 5.7. Please phone in. Let's relook at that now, because now's the time to do it with a bit of a softening of that regulation. So really the market at the moment, in the investor market, we've had one of the busiest Januaries, and in fact we did some seminars in Sydney. So welcome to all my new Sydney clients, and really look forward to having you invest with us, and looking forward to a terrific outcome there. And I'm just as excited working with you as I'm sure you are with us. So that was our seminar round for January, February. February's nearly sold out, so anyone who's interested in attending, please jump online and register now. And I wanted to thank Serani and Michael De Silva for such a beautiful testimonial you gave us at our Christmas party. I'll attach that to the blast as well. So thanks for listening. Don't forget, let's see how the market opens. Don't remember that the investor market is not tied to the residential market. We're seeing consistent growth, and also credit cards, let's get them back under control as soon as possible. And if your interest rate is high, for your investor loans, give us a call. Let's get on top of that straight away. Thanks so much for listening. Take care. Bye.